Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at DraftKings. Now, this is why. This is a stock that I haven't really followed, but I've had more and more people asking me about it, so I thought, you know what, maybe I'm kind of missing something here. And I was. Not anymore, though. But here's the thing. This is actually a stock that it's simple to trade, and the reason I'm saying it's simple is because the pattern is really, really clear. This is the 8-day exponential moving average right here. So each time the stock falls to the 8-day EMA, that's where the support is. So at some point, it's going to stop doing that, kind of like it did here. You know, it's up here, and then at some point, it starts drifting sideways and then ultimately falls below the 8-day EMA. So this is a real strong trend. Then this is consolidation, you know, this consolidation, and now we're in the strong trend again. At some point, that strong trend is going to give way to a more of sideways action. Could reverse, I don't know. I don't have a crystal ball. So I don't get to make that choice. But what I can do is I can protect my profits by selling calls and puts. And so this is what we did at Option Market Mentor. I actually bought this stock on the 15th, on this big day here. Okay, so I bought the stock, but I also sold the put and I sold the call. I bought the stock at $29.19. Okay, so a little bit below where it is right now, but not much. So I buy it here at $29.19, and I sold the $30 call for $4.05, and I sold the $25 put for $2.65. So those options were super expensive because the stock was moving up so much, right? So I put all this stuff on. Well, guess what? The stock is up a little bit from where it was when I bought the stock and sold the call. So you would think that the call that I sold would also be up and I would actually be losing money on that $30 call, but that's not true. I've actually made 25% on that already. Sold it for $4.05. It went out at $3 today. How about on the put side? I sold that at $2.65. This is the $25 put. I sold it at $2.65 and now it's worth $1.40. I'm almost at a 50% profit on that. So what I actually managed to do was I bought this strongly uptrending stock and it did keep going, right? Okay, so that's great. But I was able to sell these options, both of them out of the money, and they were so expensive, you know, momentarily, that even though the stock's up a little bit more versus where it was when I put on this trade, the options that I sold have actually shrunk in value. So this is one way, and it's called a covered strangle. This is one way that you could trade these super risky stocks, you know, that are moving so fast. You can trade it with some margin of safety. We did this with Novavax before, if I can get quotes here. We did this with Novavax. We've done it with some other stocks recently, but it's a really good strategy, and it's the one that you want to be using when a stock is really moving fast. You want to take advantage of selling those options. So anyway, that's it. I will see you guys next time.